government has made money on this. All the major banks have loans against this. All the major industries, the majority of their business is property. And the number one asset held by everybody in China is property. How do you pop that bubble without causing massive social unrest? And so I guess by 2020, after the COVID lockdowns and whatnot, he thought he had enough control politically and economically to pop the bubble. And so they started doing what every country does when they pop a real estate bubble. Same with the Fed did in 2007 and 8. They start raising the price of credit or restricting developers from getting it. And predictably, the market collapsed. And so we're 2 or 3 years into this situation, and deflation is sitting cold in China. The median sort of time that it takes to clear a property bubble is, 5 to 10 years. You think about the United States, Japan, it took them 20 to 30 years to get out of it. And so that's what she's staring down the bubble, like, okay, what the fuck? What am I going to do to get out of this situation? And at the same time, the geopolitical situation's heating up. There's proxy wars everywhere between China and the US. There's a trade war and all these things, right? And he's trying to right-size the economy in this property bubble. So there's two options. One is there's local traders who are able to wire money in and out of bank accounts, and you can buy and sell different cryptos. And that's how you get crypto in China. It is not banned.
So that's how the average retail kind of like mainland China participant would do this with kind of like a local Bitcoin P2P type of experience.
Correct.
And how liquid is that market? How efficient is that market? It's obviously not as good as an exchange, but
size, definitely millions of dollars. I mean, there's definitely a lot of size that goes through that. All the major exchanges, the Binances, the OKs, the Huobi's of the world, they all have their messaging boards in China and do decent kind of size business. I don't have any sort of numbers on that. It's not really published.
But if you want crypto in China, it's not hard to get, is what you're saying.
It's not hard. It's not you go to Hong Kong, obviously, and Hong Kong is China, but not China in the same respect.
Yeah.
But you go to the local currency dealer, it's, Bitcoin, it's a renminbi dollar and USDT, right? USDT is massive in China, right? People don't understand, they think fucking Jeremy Allaire is going to take some business out of Tether. Go fuck yourself. Tether is king in China. They love it. And it's liquid. And
as time goes on, the money printer always just becomes more corrupted. It's just the politicization of the money printer is just inevitable. And I think back when we created the gold standard, the dollar on the gold standard, that was the most credibly neutral version time era of the dollar that we ever had. And ever as time has gone on, it's just there's been just more and more political influences that are creeping closer and closer to the money printer. And now with kind of them formalized flipping of power over the money printer between the Fed and the Treasury, it kind of seems like we're in the final stages of well, eventually we're just gonna rip the mask off and just not even pretend that this is political or credibly neutral, and just start issuing money in the direction that political parties want it to go. Is that kind of how that's the trend that I see? Is that how you see it?
Cyclical, right? And the Fed and the Treasury were the same organization from 1945 to 1951 in the United States, right? In China, there is no such, the PBOC is just another arm of the state, right? And so the transaction fees are coming down. It's more secure because in a proof of stake situation, it's got a higher total notional value of the network. Therefore, it's more secure. And if we believe that there's dangerous state actors or corporation that want to take down competing sort of free association of people using compute, then wouldn't you want the strongest chain, which is the one that has the most value, to be slashed? So I think all these things start to matter when the velocity of change slows down on Solana, because it's past success breeds future failure.
Okay, but so that's cool. That's interesting. I do think that's how the market is viewing ETH right now relative to Solana. They're looking at kind of cash flows, and Solana is throwing off a lot of cash. It's almost looking like a capital asset. I will ask though, this is different than the way people value Bitcoin, right? Bitcoin doesn't have any, it doesn't have any cash, doesn't have any burn. It's just viewed as this monetary asset. And
Correct.
So a lot of people that are ETH bag holders, maybe ETH holders, are like, Arthur, dude, different rules.
Computer is predicated on you spending ETH to use the computer. The value of gold as a monetary asset is not predicated on industry using gold.
let me ask another question, because like we're actually, we could get into like debating this, because we're kind of ETH is money bulls, as you know, Arthur. But like, let me just ask a more general question of like, what would change your mind on this? Because I know you're a trader. I know you're super practical. I know you'd like, you would change your mind on particular assets and the way they're framed if evidence came forward to kind of like persuade you otherwise. What would persuade you otherwise that ETH actually could have some monetary premium?
I don't think that. I think it's so fundamental to what ETH is that unless you're saying that there is no longer any endogenous yield in ETH, the fee is no longer paid in ETH to use the decentralized computer that's hosted on it, I don't think it can ever be money in the way I think about money.
Interesting. So you think because it has utility?
If ETH went to $100 million per ETH, that's actually a problem. Because if it's too expensive to use ETH as the commodity that runs the computer, then nobody uses the computer. And so there is a price at which
it's like one in 100,000 or something.
Yeah. And so, but obviously if we're talking about meme coins as an attention asset class, you need to be sufficiently large before you get the most amount of inflow into your project. So if I'm not sitting at my computer all day, I don't have time to try to find the next, $10 million to $500 million market cap meme coin, then once something crosses 100 million to 200 million market cap, and I somehow hear about it, whether it's on Twitter or somebody mentions it on a podcast or somebody's chatting about it in a chat that I follow, then I'll ape, because, okay, it's proven that it has enough virality to make it across these very hard hurdles. And therefore it's more likely to get, Matt Levine and Money Stuff on Bloomberg talking about how dumb it is that these crypto idiots are buying this. Right? When I see that, I want to own that because he's talking about it. He heard about it. So that means all these other Muppets are going to buy it too now. And you should size your positions accordingly, meaning that like when you go to bed at night, you can keep your phone on silent and do not disturb because you don't care what happens overnight. Bitcoin could be down 75% when I wake up tomorrow. Am I going to sell any? Fuck no. Right? Because I understand, okay, well, there's a short-term dislocation. You sell what you can, not what you want. And if Bitcoin's extremely liquid, maybe it's a Saturday night and somebody threw some missiles around. The only thing that people could trade is Bitcoin. They dump that so that their risk is, the right way around on Monday morning when all the other markets reopen. Cool. I'm ready to rock and roll and handle that sort of volatility because I'm not going to get liquidated. But I know that over time, 5-10 years from now, or whatever it is, Bitcoin will keep pace with the price of energy, and energy will go up because we're destroying it through war.
So that's how it feels like it should trade. Does a cryptocurrency, does Bitcoin become kind of the new gold that central bankers like hoard? I'm not talking about like the next 10 years. I'm talking about like, millennials are the new central bankers or something like this. So, 30, 40 years in the future.
I mean, maybe, but I think the trade right now is gold goes up 10 to 20x in the next 5 to 10 years, based on just historical precedents and who's in charge right now. Could that change? Sure, of course it could change, and my view would change, and I'd adjust my portfolio accordingly.
Arthur,